Learn how to master one trading strategy at a time. Stay tuned, traders. We're going to talk about that next. Good day, traders. I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about learning to master one strategy at a time. Now, I've received a few emails from different traders asking me, why are you trading different systems? Why did you switch to end of day? Now, here's what I'm going to talk about today. I'm going to talk about the different trading systems that I do have and how I base my daily routine around that. One of the things, I think there's some big confusion. I had a comment recently on one of the YouTube videos saying that the 5-minute charts are just noise. That is the furthest thing from the truth. If you don't think so, then you should go and read Al Brooks's material. You should read Bob Volman's material. If you study the 5-minute charts long enough, you'll realize that it is not just noise. If you understand hourly charts, daily charts, if you understand price action in general, you will know that the 5-minute charts are not just noise. But there are reasons why I don't choose to trade the 5-minute charts. I do have a 5-minute trading system that I have called Catalyst because it's based around catalyst type events. But that all boils back down from my daily, my hourly chart setups, my first hour of the day, all these things that I talk about with opening range. But what I think is really important with however you trade is irrelevant. It's important though that you learn to master one strategy at a time. Now, I've spent years looking at different types of trading setups. And one of the things that I've learned is that I'm only looking for my A-type setups on all those time frames. I've said that I've switched the bulk of my trading to end of day, but I still look at my hourly charts and I look at the announcement schedule for the entire week, and I look at my hourly charts based on the end of days for certain pairs when there's major releases that are on the calendar for that week. The reason why that is that I will look for opportunities where there's momentum or reversal or continuation setups that are potentially maybe measured moves. They may be retesting of highs or lows, but there's a significant range there of at least a 1-to-1 or a 2-to-1. Now, those are trades that have high momentum or strength already in play. So those are not necessarily position moves where I'm looking for an asymmetrical 3, 4, 5-to-1. Those are my end-of-day trade setups. But what's important about all of that is that however you trade, you know your instrument intuitively. So you've studied that instrument long enough, or the instruments long enough. You know your strategy right from the beginning and end in terms of your trading plan, your entry, your exit, your stop placement, your position sizing, your money management, your management of that trade along the way, your profit taking or your exiting of a trade with a time lapse, however that is. You need to know your instrument and your trading plan inside and out. And one of the things we talk about in terms of developing confidence, a winning mindset, and the discipline to master the markets, that doesn't happen by accident. I talk about getting my 7-step daily routine for high performance traders. The whole point of that is that every single day you're inching your way forward in terms of mastering your skills, your vision of the trader you want to become in 12 months, the goal setting, your daily routine, your accelerated learning, your journaling, all the things that are going to force you to raise the level of your performance every single day, or to learn something every single day that will allow you to continue to improve. So some of the people that I've had discussions with, I mean, seriously, it's right over their head in terms of the Holy Grail doesn't exist, but your ability to control your skill set in terms of your trading plan and executing that flawlessly day in and day out and not being attached to the outcomes of those trades is critical. One of the things I spoke to a gentleman about yesterday was that one of the ways that I've on my end-of-day trading is to reduce my risk or my likelihood of endangering myself with erratic, impulsive, illogical behavior is obviously limiting my screen time by not even being on the screen, but also distributing my trades, my weekly trades across the board over, more than just one instrument. And the purpose of that is that I only have an allocated amount per trade on each trade. So the likelihood, like I don't have an attachment to that trade. If I lose, I know that I'm losing 1R. But if I'm profitable, I know that I'm going to be 3 or 4 or 5R over the weekly or monthly ATR. And that's critical. Even with my intraday setups, measured moves, it's critical that you understand range expansions, or even, you know, if it's a momentum trade, if there's already a measured move in place, knowing where your target is, because the market, a lot of these market movements are driven by computerized systems, and they are specific to the pip in many cases. So unless you understand that, you may be into a profitable trade without any predefined targets or exits, and the market will auction away from those levels, and you could turn a winning trade into a losing trade. You know, even knowing when to go to break even. However you trade, it's important that you know your trading plan intuitively. Yes, I run multiple types of trading strategies. Do I run them all the time? No. But when the ideal setups are there and I have you know, a type A setup, I will take that trade, whether it's an intraday, you know, a catalyst model off of announcement or going into an announcement, or purely end of day based on the opening range of the week and staying with the trend. So, you know, hopefully you got some value out of today's video, traders, but, you know, there's no such thing as noise. You know, every single movement on that chart is order flow. And, you know, I don't believe that the markets are, you know, they're too big to be manipulated over the longer time frames. I think that I'm quite happy to, you know, week in and week out, my strategies are robust enough. And the reason why I have multiple strategies is that sometimes, you know, those are just, if you have 3, 4, 5 streams of potentially generating profitable trades and still limiting your screen time, or limiting your likelihood of, you know, having impulsive, emotional, or illogic, erratic behavior on the screen, that's critical. And I believe that I've done that. I've made all the mistakes. I've made a lot of mistakes. And what I started off with when I started a lot of this, going back to looking at where my problems came from, the first thing I looked at was, how can I eliminate the likelihood of me creating those problems? And so working backwards from there, a lot of my strategies based on what I knew were high possibility types of recurring activities in the market, I built my strategies around those. And when there's plenty of trades, there's plenty of trades in the markets. Now, obviously, I don't want to be at the screen all the time, but I know that on average, the market will provide, you know, X number of pips per week that are consistently there, you know, with a limited amount of risk, with a risk reward that's skewed in my favor. And when I'm wrong, and it's just another trade. And over a series of data points, as Peter Brandt puts it, you can monitor your expectancy and then keep sharpening that edge. Every single day, I'm looking to how I can improve my skill set and my edge in the markets. And I think that when, you know, if you really are truly passionate about trading and being profitable, as I said, there's plenty of ways for people to do that. For me, this is how I approach the markets. I'm a competitor. I come from an athletic background. I love the markets. I love the opportunities that every single day are there. But I also recognize where my limitations are as an individual and a human being, and what our attachments are to the outcomes in terms of money and gains and losses and winning and losing, being right and being wrong. And this is where I encourage you to keep bulletproofing your mindset on a daily basis, and that comes from you honing the skills, knowing your instrument, knowing your trading plan, and being able to flawlessly execute that week in and week out in the markets. So hopefully you got some value out of today's video, traders. Stay disciplined, stay focused, learn one strategy, master that one strategy, put it in your toolbox. If you've got other strategies, work on those and master one at a time. Get really, really good at that. Execute it, monitor your results, journal your trades. What did you do well? What did you do not as well, or what did you do wrong? What could you do better next time? How can you get more out of your winning trades, and how can you lose less on your losers? So keep getting better. Again, like Mike Bellafiore says, how good can we get, traders? Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.